I paid a content creator way too much money to do a review of my socials, my TikTok, Instagram, YouTube. And one of the things he said is that I need to be eye level with you guys. So for the other traders watching this, just be aware, this is the only time you'll ever be on my level. I'm feeling extra spicy, but it's time to lock in. We got a lot to talk about this week. What's going on with the major retailers, what will cause an Nvidia crash in the future, and what you need to be watching for this week.
I was down, but now I'm up. Yeah, this all God, this ain't no lie. Yeah.
So the first thing I want to talk about is what's going on with the major retailers. Target, Walmart, you know, one of the largest retailers in the world, has started cutting prices on thousands of different items, and they've said that they want to continue to cut prices into the summer. This should be good for inflation, but it also means that there's probably some weakness in the consumer that they're seeing that's causing them to bring down those prices. Now, this is also different from what the Fed's been telling us and what a lot of the economic data says, which is that the consumer is actually doing pretty well. Everything we're seeing shows that the economy is strong, that GDP is good, that we're not in a recession, that it's stronger for longer. But then you have these companies coming out saying, actually, we're lowering prices. That doesn't compute. And also, if we look at the consumer sentiment, it also doesn't compute. Consumers are extremely negative on the economy right now. 50% of people actually think that we're already in a recession. Something doesn't make sense, right? And it could just be the negativity has just spiked and people are become delusional. Maybe that could be a thing. But at that level, at that size, it makes you pause. And then we also see right here that, hey, retailers are also cutting, which makes me think that we might not be able to trust some of the data that we've been getting, that the consumer might be worse off than we think, the economy might not be in the state that we think it is. And what I can say with a bit more confidence is that these pricings coming down should cause some ease on inflation, because these are major companies that make up most of the goods that people buy, and that should also ripple out. If Walmart lowers prices, other companies to compete with the major retailers will also lower prices. And then we're also coming into an election year, right? June's right around the corner. We've got some debates coming up, some of that election euphoria that we usually see on election years that provide really strong returns over the year that should cause some more melt-ups, money printings likely on the way. The Fed will probably have, one cut just in sentiment to help the political push from the sitting administration. So all that in mind, this does look like a bullish setup for the time being. One thing I got to add to that is that generally in capitalist societies, recessions don't just naturally develop. They happen through some sort of event, through some sort of catalyst that halts the economy. We haven't really seen that. And so that is what makes me somewhat suspicious of the consumer sentiment, somewhat suspicious of the idea that we're already in recession. The GDP numbers might be, falsifiable because of how much government spending actually is funding that growth and how much it's kind of hard to discern how much is actually from the capitalist society, the companies growing, the consumer getting stronger and making more money, and the wage inflation, and how much is just like, oh, the government printed a bunch of money. All that said, it's kind of a loser's game. Most of the money I've made from the market has been playing the charts and not from being correct on my wider macro analysis. Although if you're wildly wrong, it can definitely hurt you. So speaking of the charts, let's dive into them. Right now for SPY, we're in this very pivotal chop zone, okay? On the fibs, we have a 50% retracement from the sell-off that we saw on Thursday, which kind of makes me believe that from here, you could rally or you could get the downside move. Right now, I'm favoring a downside move that would also be very healthy for the much larger bull market trend that we're seeing right now, okay? We don't really want to continue to melt up from here. We want to see the market kind of take a breath a bit. And so I'm looking to see some of these key levels break down, and I want to see maybe a visit to 520 potentially this week. It might take an extra week for that to occur. Now, if the market wants to be bullish, I do like Nvidia to the upside. And I want to say, back in April, I had called for the high on the year for Nvidia to be 1500. Right now, I have that adjusted based on my Elliott wave analysis to 1300. Actually, it's not even showing up right there. Yeah, 1315.35 is what I'm looking for as the high of the year for Nvidia. Of course, Nvidia is in a bubble, and a lot of people are not understanding why Nvidia is in the bubble though correctly. And I kind of wanted to break that down. I did a 1-minute clip, but it's hard to capture all of your thoughts in 1 minute. So let's try to keep this short. Nvidia is not Cisco of 2000, and you could tell by the 26 billion this company's made that this is real growth. This is an incredible company. They have gained the GDP of Germany over the past year. They've literally gained Amazon's market cap in the past year. And it isn't just hype and promises, it's deliveries, okay? This is the AI chips that everyone needs. They have the other big tech companies by the balls. That's why their margins are so high. When Amazon negotiates with Nvidia or Microsoft negotiates with them, everyone has to basically play Nvidia's game because no one else has chips as good as them, which means everyone's going to be gunning for that 95% market share that Nvidia owns. And a lot of people think, okay, that's what's going to take them down, but that's a very slow process. That's not what crashes a stock. What will crash this stock is the relationship we see with the total market cap of AI, which is around about 12 trillion right now, and the actual revenue being generated, which is like 1% of that, quite literally. It's very minor. So what you need to be looking at and understanding rather is the infrastructure of the space. You have the chip company that makes all the chips, sells them to the cloud companies, and then you have the companies underneath that then use the cloud companies to get access to the AI, right? These companies at the bottom of this infrastructure aren't really making much profits. They're not really seeing the use of AI yet, which means that their spending that they're doing to get access to this AI could drop off. They could take a moment, and you'll hear this in an earnings call. I don't know when, but it'll be something. It's what you want to look for. You want to hear one of these companies that they're using the tools of the cloud company to say, hey, we're going to pull back on our spending because we're really not seeing this pay off. It's not generating us more profits. The instant that happens, the AI market as a whole will probably come down 20%. Nvidia could retrace 40, 50% after news like that, because it means that the cloud companies will stop spending so much on the chips. And also at the same time, they'll probably also realize like what's the appropriate amount to spend on the amount of chips that we want. What is the appropriate amount to spend on all this compute? How much do we actually need? No one knows. So everyone's just throwing as much money as they can. And these big tech companies have a ton of money. They're basically fueling each other's earnings calls. One company's spending is another company's earnings. That's exactly what's happening for Nvidia. It's like all these big tech companies had all this cash, and Nvidia's basically taking all of it through the sales of these chips. So when you hear that on that earnings call, like we're going to pull back on the spending to get access to the cloud, to get access to the AI, that'll be when you know that this market effect is going to come soon. One company will say it, another one will say it, then you'll get the ripple effect downwards. Now, what could happen maybe before that is some major innovation in AI occurs. And then it does become useful. And then you'll get, NVIDIA grows into its market cap. Maybe NVIDIA actually diversifies into something like healthcare, and then they can actually justify this price. That's not really a guess. That's what the CEO has mentioned before in the past, that they're wanting to break into other markets. They have all this cash now. They could look to diversify. However, that diversification, by the way, would be at the goal of getting them out of this cyclical business right now, because this is going to have, like, every time a new chip comes out, sales are going to go exponentially high as everyone goes to buy the next big new chip, and then they'll come back down. This is probably also why Microsoft signed a deal with AMD. And I'm kind of derailing myself a little bit, but that just occurred to me in real time. It's like Microsoft is desperately trying to get away from NVIDIA because they have them by the balls. Because AMD did a software deal with AMD, but part of NVIDIA's superiority is the fact that they have the best software. That superiority, though, does not help them escape from the cyclical nature of the business. So there will be already a part where this kind of dips up and down every few years. You get the new chip, then everyone rushes to the new chip to get the best chip. And then after that, you get a pullback as people realize like how much they really need to spend. We also might never see them get this much hype ever again. This could be the moment where no one really knows how big their data centers need to be or how many chips they need or how much they should be paying for this. That's all speculation. So they're all trying to buy as much as they can. And then, so it'll take time for this space to mature and for us to have a better understanding of what the normal should be. So that's what you need to look for, though. And there were a lot more stocks that I wanted to cover on this video, but we're already getting a bit long. So let's just cover a few briefly. GME. What do you want to look for on this stock? You want to see if we get a break of the 2380. If you get above that, it looks like we could make another attempt at another meme rally. I think the meme rallies could continue for these stocks. With that hype coming back, there's plenty of liquidity still floating around apparently. So I'd be watching that for a break to the upside. These are the key levels you want to be watching. Over $28. I mean, you could have another shot at making another massive parabolic run. And in fact, there are more shorts on this stock now than there was before the run. There's only like 20% short interest. It really wasn't a squeeze. You need over 40%, which is actually why I'm so shocked that these meme traders weren't going to something like Beyond Meat. Beyond Meat it did make a small run, I guess. Nothing compared to what GME did, but this is actually where all the shorts are sitting. This is your massive squeeze potential. You got a decent move from 7 to 10, but this thing could have squeezed so much harder than it did. And now let's cover Shopify. Shopify is actually giving me a beating in a very small position that I built before earnings. Obviously started off well and then got slaughtered. And right here at this touch at this 57, if you break this, I think you get an extremely easy short setup for this stock. Okay, look for a continuation to the downside. Longer targets I don't have set here, but yeah, I mean, you could be looking for 51 to the downside just at a glance. A continuation here of the downtrend. 47 for the fibs. Actually, got your 1 to your B, so maybe we'll get a small bounce actually for the 1. So likely we could start the week off with a small bounce here. And then you want to see then you'd want to set your next level right there. And actually that's a really strong level too. The fib has you a little bit below that, but I like the psychology of these levels right here. That's probably where you want to go, or where you want to look for a downside. Look for some resistance right here at the 50, and then look for some more resistance. Raise this down to 62. You've already broken past that. I want to look here. Let's do this real quick. Yeah, that level's coming up again, by the way. Right there. Further down. This 54 showing up on the fibs. All right, let's look at this back on the 15. $54, $50, $45. Yep, that looks like the targets you want to look for major levels. Is that 54? Show any? Yeah, you're hitting some key targets there. There's been some stops here. Actually, chop zone there. Oh, I didn't mean to move that. Right about there. Yep, that's what we're looking for Shopify. See the break of the 57? Look for these downside targets. you get above the 59, which I don't think you will, because if we look on the daily and the weekly here, the weekly's really weak, daily's weaker. There's even a weaker name than this that I shared in the Discord, by the way. Holy cow. I usually do a review of last week's trades. I ended up sharing that on Twitter. The full review, which I usually don't share those, had a 77% win rate last week. Getting back on trend. I was having some slippage, and that wasn't good for like 2-3 weeks even. Probably only 2 weeks, to be honest, but we're coming back out of that. Most of the year over 80%, insane, just murdering the year. And I'm looking to get back to that, be more focused on following these targets, keeping myself in line, not getting too excited and playing too many lottos and too many aggressive trades, which can happen when you're super confident, right? But so we're getting back in line, getting back into robot mode, and killing the market. Anyways, good luck, guys. I hope you found this helpful. If you do want to join the trading community, the link's going to be down in the description. Please like and subscribe to the channel, and God bless.